Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 29th of October, 2022, and this is the weekly technical analysis for spot gold and dollar yen. Let's begin with spot gold and expand this, and you will see there's a number of US related news next week, with the key ones with the FOMC rate decision on Wednesday, and then the non-farm payroll report on Friday. And the Federal Reserve is expected to increase rates by another 75 basis points, a fourth in a row, and pushing up to 4%. And this is due to with the inflation numbers not cooling off yet. And also the jobs report has not stabilized, and it's still increasing, which is adding inflationary pressures. So a key one for the US dollar, and for last week, the spot gold was fairly quiet in a narrow range, and just oscillating around the 1650 level, and ended up back down towards the 138 fib extension. So fairly narrow range, was not able to climb up higher to test the swing low, the previous swing low, which was at the 1688 area. So it could not push up higher, so it was constrained in a fairly narrow range. So we'll see this week whether it's going to be affected by the Federal Reserve announcement, and whether it's going to tumble down at the expense of the US dollar pushing up. We'll see the dollar index later on, or if it's able to break out higher but don't need to test the resistance area. So for now, we can likely just draw a box here. And we'll see whether it's going to break out higher, test the previous swing low with the daily 55 coming down in confluence, or if it's going to break down to test the swing low at the 162 fib retracement, fib extension. So it needs to break out of this box, or whether it's just going to consolidate and just keep ranging within this box here. So most likely there's going to be a trigger to break out either way. And if the US dollar breaks out higher, then this is definitely exposed to the downside, with the 1600 coming in the picture below the 162 fib extension, but it could just potentially be a spike lower. We'll see if it does that. So yes, the 1700 is still going to be a key resistance level. and it closed slightly lower, bearish for the week and in a narrow range. So yes, next week is likely going to be a breakout or breakdown. It has already tested the 162 fib extension twice with this double bottom here. Now we'll see if they're going to be tested a third time. All right, let's compare this with the US dollar index and to see how that performed last week. And here's the DXY, the US dollar index, where after a bearish close the previous week, paused below the 112 before falling on Tuesday and Wednesday as an inverse correlation with the euro, and fell through the support level of 110 and down to hit the 78.6 retracement level before bouncing off on Thursday and then closing neutral above the daily 55 EMA on Friday. So it fell through this support, intermediate support level. Let's change that to resistance now. And the 110 is likely going to be a support still. And with the 78.6 and the 109 area, it's a key support now that it has tested it. Okay, we can bring down the resistance back down lower. 138 fib extension is likely going to be the key resistance, and we'll see if it's able to climb up to test the 112. So for the moment, it seems like it's possible to find support and try to break out higher and likely stay neutral for the week around the 111. So in between the 110 and 112 range. And of course, critical news from the US this week with the Federal Reserve and the non-farm payroll report. And looks like for now it could be also forming a bearish channel here. So let's see if it's going to move within that range. Let's expand it out. Then if it's really finding support here at a 786, then there's potentially it could attempt to climb up higher and take a couple of weeks to perhaps retest the resistance at the 138 fib but next week is going to be key. Okay, let's move back to the other major pairs. Let's move on to the dollar against Japanese yen, where last Friday the BOJ did announce their decisions, but nothing has changed. It still remain neutral. But on Thursday, it already dipped below to test the 145 level. It was this previous swing high here. Tested it and bounced off with what looks like a morning doji star. So this is a bullish candlestick pattern here. And if it's really going to follow through next week, then dollar yen could continue higher, but it's still exposed to the BOJ intervention, so it may not get up very high. Not sure whether it's going to even test the 150 again. So there were some intervention last week as well to push it back down, and it did cross the 146 round figure to really hit the key support at 145, which was the previous intervention level as well. So for the week, it closed as a doji, not surprisingly. So it's stayed indecisive and neutral. And we'll likely see this range for next week as well, from 146 to probably just below the 150, perhaps 149. So there was a strong rebound back on the Monday, but then after that it was pressed back down again. Let's switch to the 4-hour to see. Yes, basically it was just drifting lower and lower throughout the week after the initial push up at the beginning of the week, and then continue to be pressed back down. All right, so also a critical week for the dollar against Japanese yen, with Federal Reserve and non-farm payroll. And do again continue to watch out for any long positions for potential BOJ interventions. And perhaps I'll add in a 149 just to yes, that's likely the upper limit here between the 146 and the 149. Let's add this to the 149 zone. Okay. All right, so do stay safe and have a good week and a good trading week, and cheers for now.